And the market's focus, a little difficult to pin down, it seems, Mark, today. Lots of disparate conversations happening. I know that you're drawn to thinking about the relationship between the dollar and rates, and you see something interesting there, especially coming up to month end.
Yeah, so a couple of things here. I think, first of all, the macro community is starting to warm up to the idea of playing for a bit more of a sustained dollar bounce. Now, short term, that is kind of helped by the idea that into month end, the monthly rebalancing flows should be positive dollar at the margin, which might feed that theme a little bit more. Some of the narrative around this is that, you know, the dollar really hasn't even been able to break lower, even though we saw US yields kind of crater in recent weeks. And therefore, that kind of an asset which can't go down means it's probably ripe to go higher. The short-term market might be kind of over-positioned short, even though the structural market's still very long the dollar. So I think that there is certainly a possibility that we do get a bit of a dollar bounce. What's interesting now is what that means for other assets. I think it could finally mean this time for gold to have a short-term correction. Does it mean risk off for stocks? That's where a bit of the debate is. My view would be this is not necessarily a risk negative catalyst more broadly, unless it's a very fast or quick dollar bounce, and that doesn't seem to be the case at the moment.
I'm searching for something that is going to change the narrative at the moment, Mark, and I'm wondering what that catalyst looks like. And you and I discussed, I think it was yesterday or the day before, black swans. We don't know what a black swan looks like. But do you get a sense that with a lot of assets doing interesting things, look at what is happening in crypto, look at what's happening with the dollar, look at what is happening with AI trade, that some of what is happening at the moment is not sustainable. And I don't know which bit of it is. And that's the bit that I'm struggling with at the moment.
I hear you, and this is what everyone's kind of looking at this market. So there's two ways to look at this, two things to look at. One is there's external catalyst and internal catalyst. An external catalyst can be scheduled risks or known kind of things on the horizon. Most of those people are not worried about those scheduled ones. Sure, there's going to be a government shutdown, but people don't really think that's going to derail the risk rally or the current trends. So you're looking for external risks that have to be black swans, which means we can't predict them by definition. Now, the other chance is an internal dynamic, as in just the price becomes its own self-fulfilling narrative. And that's what you're kind of seeing a bit in crypto at the moment. You're getting a little bit of shakeout in some of the alternative coins because they just went too far too fast. Maybe that spills over to some of their assets. And that's where the dollar story comes into this, because if you get a bit of a dollar bounce fueled by people looking for a new theme to play, and the fact that, you know, yields may have bottomed for now, and the fact that we've got month-end rebalancing kind of feeding it, maybe that could feed through to other assets. But I'd be reluctant to put too much kind of conviction on that idea that we're going to get a self-fulfilling price-led move, which means your base case has to be that the current trends continue for now until we see that external catalyst. But if there is going to be an internal change, it's going to probably come from the dollar.